Hello traders, this is Debraj again. Today I'm going to discuss a setup we took last week, which was an EURUSD on Friday. This is a nice setup. You can see my screen. It was EURUSD on 25th of February, and that setup was very easy setup, and it became more easier when we took the order flow confluences with it. So we all can see here from the chart, EURUSD is a 30 minutes chart, and we were at a nice demand level here. There was a nice demand. Okay, how it became a nice demand? If I just switch to H1 time frame, you see this double wicks, upside, downside. These are hidden demand zone. This up wick and down wick, these are hidden demand zone. So if I switch time frame 30 minutes, then I got a nice demand here. This rally, base rally, and it left some inefficiencies also here. So this is my valid demand zone, and I was waiting for the price to come here. As we know that we trade order flow confluences when the price is at a good order block or a supply demand zone, we look into the order flow chart and take the trade. Without order flow confirmation, we don't pull out the trigger for buy or sell. In this case is buy. So recap, this was an M30 EURUSD nice demand zone. If you have seen my previous videos, then I always mention I normally wait for the price to mitigate at least 50% of my order block or my demand in this case. I'll not be interested when the price is coming this and giving some movement. I'm not interested, because the better deals can be found only on the lower half of the 50%, or at least the price should touch the 50% of my OB. So that means 50% of the OB should be mitigated. Then I will look for some setup actually. And we are at 30 minutes. So in order flow, I can look for M5 or M10 order flow footprint. So this is the M30. When the price was coming here, let's switch to M10 and check what was happening there. We see that this bearish pin bar or the hammer, whatever it is, this pin bar was just touching my 50% zone, 50% mitigation zone here. When it touched here, and we can see from the price action, it also took out this liquidity, right? It took this all liquidity here. It swept the liquidities here. You can just mark a little bit. These are all sell side liquidity it took, and then the price came here again and it went up. But how this trade is valid if we look into the order flow footprint? So order flow footprint will be opening a 10-minute footprint chart to get the confirmation whether there were really sellers are trapped or not. As we know, if we want to buy, then we want to see sellers should be trapped down below. Some sellers should be trapped down below and buyers should be joining the party. Then we will be confident to say that yes, at this order block, buyers are stronger than sellers and this buy is more valid, or this buy is more confident to take. So let's check order flow footprint quickly. This is EURUSD 6E chart, 10 minutes, because we are getting confirmation from 10 minutes. That is the pin bar. If you see, these are all liquidity being taken out, and that is the pin bar we are seeing here. That's the pin bar with 89 sellers trapped here. That's a nice info, right? You cannot see in this pin bar what is happening, but when you compare this pin bar with this pin bar in 6E Euro Futures footprint chart, then we see and scan inside the candle that yes, in this candle there are 89 seller contracts tried to push the market down, but the market closed above. So that's a good sign that maybe these are the last sellers who got trapped down, who got stopped out down. It's a good info when we are trying to buy. We're waiting, okay, that's good info, the sellers are trapped, and also some buy contracts I'm seeing joining, also 65 contracts. Next time the price is coming on the 10 minutes only. In this candle I'm seeing lot of buyers are also now joining, and also see in this candle you see 35 sell contracts trapped at the last slot. So this is the last seller before this big move. This is the very useful info. You can say this, yes, here sellers are really trapped in this bullish candle. We're looking at this bullish candle here. That is the bullish candle here we're looking here. So previously we saw 89 sell contracts trapped down below. Again we saw 35 sell contracts trapped down below also here. And when the candle is closing bullish, we are seeing these buyers are joining these lots. 58, 86. These buy contracts are also joining. So that's enough for me to pull the trigger for buy. But if you are more conservative trader and if you want more confirmation, then pay attention. Then we also look for the delta. See this delta, max delta and min delta. Min delta is for selling pressure, max delta is for buying pressure, delta is for the main pressure after closing the candle. Look at here on the third candle move. Already we are seeing good price action. Already we are in a good order block. 50% mitigated already here by this week. We saw some sellers are trapped. Buyers are really joining, okay, with big lots. Then first, second, on the third candle here, we are seeing these delta becoming very much positive, huge delta. If you compare last 15-20 candles here, you can see that this 472 is really big number when you compare last 15 candles or 20 candles. So that's an extra thirst, extra confirmation you're getting that yes, this is going to be going higher. And this is happening where? First, second, third. This third candle. Here, EURUSD, first, second, third. This is the candle. On the left side, that's the candle. And our entry, you know, from the point of control, right? So our entry would be here, from the point of control. On the third candle, our point of control is here, these rectangles. So this is your entry. Stop loss, you can make it below this candle at least to take some buffer. That is your setup. Now if we can compare the same thing here on the real chart, EURUSD, then it will be which candle? First, second, third. This is the candle, right? This is the candle then. This is the candle. First, second, third. This is the candle. And here somewhere would be the point of control. So if I set my risk reward, then first, second, third, this is the candle, and here would be my entry. Stop loss would be there. That's the entry. And you can easily take 3R. 3R is minimum, and we know that price action trader, so it will go to this supply. So this order block we are safe till this now. Till this part we are safe to take this trade. And yeah, so that's the trade I wanted to talk about, EURUSD trade. So how we combine that, just a recap, we were in a 30 minutes OB or demand, price came there, mitigated 50%. We switched to 10 minutes chart because we want to check the confirmation on 10 minutes chart, footprint chart. And from footprint we saw that on 10 minutes we have a seller's trap, nice seller's trap. Buyers are joining here also had a nice seller's trap. Buyers are joining, and these things are all happening at our point of interest. And at this candle we saw that also delta is very positive, huge delta. And that's the thing, we should not wait anymore. We have to pull out trigger after this. Boom. And you see the movement. See, when a good price action works, you know, it doesn't wait. It will not wait. It will just boom like this. So that's the intention. We are reading the whole story with order flow footprint. and we are using this in our everyday trading. Hope you like this video, and please subscribe our channel, and like and subscribe. I'll try to post more useful video like this. Thank you for watching the video. Bye bye.